Well, welcome everybody to the kickoff of Small Biz Funding Month. October is a Small Biz Funding Month, and there's a lot of classes and a lot of events being held this month, and Meet the Lender was the kickoff. Did y'all get a chance to go downstairs and meet with a lot of the exhibitors downstairs? Good information? Good, good. Well, the event will be going on until about 7, and so I'm going to wrap up this session. I know it was said 6:30, but I'm going to wrap it up about 6 o'clock and then open it to questions and answers. So those of you that want to go back down to visit with any exhibitors, you'll have the time to do so before 7 o'clock. Fair enough? Good, good. We heard some concerns that were concerned about, individuals being concerned about being 6:30. So I thought, okay, well, let's just open it up to questions and answers at 6 and then allow you some more time. Okay, well, for a full class, a list of classes, please go to austonsmallbiz.org, and you can also follow us online at Small Biz Austin, and also with updates for this funding month, because we've got other classes that will probably be coming up, and so you can always follow us on that. So to begin with, we have three well-known panelists in this community. I'm going to introduce each one of them. Well, I'm just going to call their name, and I'm going to ask them to speak a little bit about themselves. And you have in front of you their bios, okay? And to begin with, Gary, I'm going to start with you, okay? So go ahead.
Yes, my name is Gary Lindner. I'm the president and CEO of PeopleFund, and I've been involved in what we call community lending for the last 10 years. And during that time, with Oxio in Texas and PeopleFund, and I've done 5,300 loans, and all the loans are to people who don't have access to traditional financing. So that's our strength, particularly minority women-owned businesses and those in low-income census tracts. So that's what we focus on. We're here, located here in Austin, but we have offices in Dallas and Houston as well. So we lend statewide.
Thank you. Lance?
Good afternoon. My name is Lance McNeill. I'm with Business and Community Lenders of Texas. We're also a nonprofit micro lender serving Texas as well. My role with them is a small business coach. My background in education are in entrepreneurship and developing technical assistance programs for entrepreneurs and helping them through one-on-one coaching.
Shasi?
I'm Shasi Wilson. I'm Vice President of SBA Lending at American Bank of Commerce. I joined the bank a little bit over a year and a half ago, and we're a locally owned bank, small community bank, really geared towards small business lending, so I'm very excited to be with them. Prior to that, I spent over 20 years doing financial consulting for small business owners like yourself, helping prepare business plans, projections, and financial request packages. And I'm very pleased to be here and to see so many people that are interested in finding out about all the different options.
Great. So let's go ahead and get started today. Let's start with Shasi to begin with. Can you explain to us what your typical small business loan product looks like?
Okay. Well, there's quite an array of typical small business loan products because we really run the whole gamut. And we do conventional lending and what's called SBA guaranteed lending, where the SBA, which is an arm of the federal government, guarantees a portion of the loans that we do. But for both of those sides, conventional and SBA guaranteed, we do real estate finance, we do machinery and equipment finance, working capital finance, some startup as well, business acquisition, and refinance of other loans also that maybe are high interest rate and you're in a position that we can look at a refinance of the debt that you already have.
Okay. Gary, now I'm going to switch over to Gary here.
Okay.
Now, Gary, I'm going to put you on the spot here. What is the difference between a traditional bank and a community lender? Because remember, PeopleFund is a community lender. So what is the difference?
The first difference is we're a nonprofit. The second difference is what we're called a community development financial institution, which means we've made a commitment to the Treasury Department that we're going to lend the majority of our loans to minority women-owned businesses, and we've added veterans to that as well. Half our loans go to startups and nonprofits. We lend from $1,000 up to $250,000, and we're also an SBA micro lender and also a SBA 7(a) guaranteed lender up to $250,000. So most of our money comes from banks, so we don't lend above $250,000 because that's the cap that we've imposed on ourselves. So we don't compete with the banks, where we get most of our funding from. Most of our loans are actually referrals from banks because they don't fit in the bank parameters. And then as a non-regulated lender, we have a lot more latitude in working with you on an individual basis to make a loan product that works for both you and us.
Thank you, thank you. Now, Lance, new to most of us are the terms like crowdfunding and bootstrapping. Can you tell us a little bit about what that means?
Sure, and I learned a lot about it since being with BCL of Texas. About a year ago, we had a customer who came through the Small Business Development Program who was seeking to raise capital for a pedicab with a photo booth on it. Very cool, very unique idea, but she didn't qualify for traditional lending. And she said, what about crowdfunding? And I said, well, I have to go find out what that is exactly. And did a lot of research and continue to do research over this year. And really, to me, it's a really groundbreaking financial frontier. If you're not familiar with the term crowdfunding, you may have heard of the term Kickstarter, and it's becoming the Kleenex and tissue paper, kind of synonymous with one another. But what it does is it allows you to pool individual contributions from a number of different people. And that collection comes together to equal a large sum. So small pools coming together to reach your goal. Bootstrapping is similar to that, and it comes from the term pulling yourself up by your own bootstraps, and you do that with your business. And that is using low-cost or free resources to really step-by-step move your business forward and grow. Are any of y'all familiar with the lean startup methodology? Have you heard anyone here? Can you raise your hand? A few of you. For those of you who haven't, write down Eric Ries and get the book, The Lean Startup. It's very good. It walks you through that methodology, and it's really a bootstrapping methodology where you validate your business as you go.
What's his name again?
Eric Ries. Eric Ries.
How do you spell his last name?
R-E-I-S-S.
Thank you. Thank you. So now I'm going to open it up to some additional questions, and all of our panelists will have the opportunity to, to comment and to expand on it, and then hopefully we'll take some questions at the end that relate to a lot of these questions. So to each of you, what quality makes the ideal client for your option? I'll start with you, Gary.
Well, for us, since we do a lot of startups, what we're looking for are people who are committed to their business as an entrepreneur. That's the first and foremost. And then obviously that they've put in some equity into their business because they believe in it themselves. And then we do a lot of business training and coaching. So we're always pleased to work with people in the early phases of their business. But and then an ideal client is one who's responsive. In other words, when we're asking for loan documents and W-2s and pay stubs, they respond quickly, and the quicker they respond, the quicker we can make a loan. So once we have the documents, we have internal underwriting, so we can make a loan decision within a week and funding within a week to 2 weeks. So it's a very quick process after we have all of our documents.
Lance, Shasi, either one of y'all?
Sure. So anyone can be a bootstrapper as long as you're resourceful and have the ability to network. For anyone who would be an ideal candidate for crowdfunding, Gary mentioned something. You want to bring equity into the deal when you go to seek a loan. Well, what if you don't have that equity injection piece? Crowdfunding is a great way to go gather that. Go gather the money from the crowd and bring with it the validation and demand that comes with it in a loyal initial customer base, and then you're a better candidate for lending. Also, a crowdfunding, a good ideal crowdfunding candidate should also be resourceful and be bold and be willing to ask. This is a very selfless and very humbling process, and you have to ask people that you know for help and for financial contributions.
Well, I have a whole list of qualities that we're looking for because we're a traditional bank and we're not on the investor side, but so we are looking typically for proven experience in the industry that you want to be in or that you are in. Good quality financial statements. For instance, if you're already in business, that's key. A good credit score, typically over 700 is what we like to see, which means you have good credit. Looking for a debt service coverage ratio of at least 1.2 to 1. and a good secondary source of repayment. Again, that's the difference between we're a bank and we need to be able to look at either collateral or a strong guarantor or some kind of secondary source of repayment. And we're looking for marketable collateral if it's there. The SBA guarantee mitigates for those deals that don't have good collateral, so there is that possibility as well. But if there is good marketable collateral, that's always helpful. I particularly like to see on the individual side, in terms of the business owner, someone who's well organized, well prepared. You know your business, and you can bring the standard info that we would want to see. The 3 years of business tax returns, 3 years of personal tax returns, your personal financial statement, and your business plan, and you're prepared with that, and you know that, and you have a good budget of what your financing request entails, and that's kind of a list of things I like to see.
Okay, thank you. I'm going to ask this question a little bit differently here, and it's the question is, how long does a typical business loan take? And then I'm going to ask crowdfunding afterwards. So I'm going to start first with just a loan process. How long does it take? Shasi, I'm going to start with you.
Well, okay. I'd say we're in the realm of where Gary is, where it's going to take a week to two of decision making and then another couple of a week to 2 weeks to close. The main part that takes the time is getting the information from you. And so that's where I went back to, if you're well organized and you have that information from me up front that is going to roll into our decision-making process, that will really help speed the time. And really, if it's longer than 3 to 4 weeks, it's usually on your end of getting the information. That will also speak to the good quality financial statements, because that's the other thing that can end up taking time through the decision-making process. If you say, well, I've gotten everything to you, but if there's lots of questions, like the financial statements don't really balance, et cetera, then those are the things that take time going back to your CPA or your bookkeeper and figuring things out. So best case, 2 to 4 weeks from getting all good quality financial information.
Thank you. Gary, what about with you?
Well, most of our clients want their money by sundown. So if you're able to bring in we have for each level of loan, starting at the lowest to the highest, we have documents to go with that, so they become increasingly more stringent as you get at the higher amounts. But once you get the loan documents that we've asked for, as I said, the decision process is certainly within that week, and then funding the following week. So as was mentioned, our typical challenge is for our applicants to get the information we want, and nothing that we ask for is what I call cruel or unusual. It's stuff that most businesses would have as a normal course of events. So, but as I said, our processing is very quick because it's all done internal here in Austin with our office.
What I'm hearing is if the more information you have really available that you could submit, the quicker your loan is going to be approved. Is that what I'm hearing?
Yes.
Yeah,
Yes.
I think that's definitely what you're
Okay,
doing.
Lance, so talk to us about crowdfunding campaign. How long will that take?
Sure, and some of those documents that they're alluding to are also important, and you'd be prudent to have those for crowdfunding as well, in particular the business plan. And BCL of Texas works with the City of Austin to provide services where we will look at your business plan, review it, and also help you from, if it's the first time you've ever done a business plan. So we'll help you create that document and look at it from a lender's perspective. And that's all through the City of Austin's coaching services that we provide in conjunction with them. But it's good to have that business plan for crowdfunding too, because you want to have your strategy in place. If you are going to be crowdfunding widgets and you sell 10,000 widgets and you're like, wow, great, wonderful. How am I going to manufacture those? How am I going to package those? Are there any regulations? You would have looked at all of those things prior to the crowdfunding event in your business plan. So it's very important to have your business plan. Our customers on average take about 50 to 60 hours to complete their business plan. And that may take several weeks, as most people are working a full-time job and creating a business on the side as well. But really, besides the business plan, you want to start planning for your crowdfunding campaign about 6 weeks in advance. There's some things that you can do to go ahead and plant seeds. You want to expand your network. You're reaching out to people. It's a PR campaign. So as many people as you can get in your network, And I'm talking about Facebook and Twitter and LinkedIn. And if you're not on those platforms and others, you need to be well before launching a crowdfunding campaign. If you have 1,000 Facebook friends, for example, you're 40% more likely to be successful in a crowdfunding project than you are if you have, just 10 or 100, right? So you need to grow that network, but also offline as well. You also need to be able to devote about 50 hours or more to a campaign during the campaign. So you got 6 weeks prior, and then you launch your campaign. Most campaigns that are successful, the higher rate of success is going to last about 30 days. You can do a longer campaign, but it's very hard to keep momentum. It is a PR event. Keep people interested and engaged. Longer than 30 days is very difficult. So during that 30-day period, you really have to be out there guerrilla marketing your business and your idea. And it's going to be at least 50 hours to do that. So you have to plan for that. And also, if you have someone who can come and help you and contribute some hours to that as well, building a team is also important for crowdfunding too.
Thank you. I'm going to ask a question before we move on to the next one. So how many of y'all in here have a business plan? Good, good. Actually,
I want to see it. Bring it to me.
That's where I'm going. Actually, I was saying, is it on paper or is it in your mind? On paper? Halfway? That's okay. If it's in your mind and it needs to get on paper, as Lance just mentioned, BCL of Texas, they're coaches for the city of Austin. We can help you get that business plan on paper. We're not going to write it for you. Oh, wait. But we will coach you to get there. And also, PeopleFund does the same thing as well.
Yeah, let me make a real quick comment about business plans. We see business plans with a lot of totally worthless information in it. We know how many people are in the state of Texas, and that that's your market. So, we look, believe it or not, for loans under $25,000, a 2 or 3 page focus business plan, your credentials, who you are, what your market is, how you're going to go about your growth in your financial projections. So it doesn't have to be long to be good, but it has to cover the information that we have confidence that you know what you're doing.
Yeah,
So we have coaches available to help you with that. That's my point.
Yeah.
Shasi,
I would just totally agree with that and echo that. We're not going to read through, or we don't want to read through 20 pages. Good, concise, and then good projections.
I thought I'd throw that in because I just wanted to make sure I made the point about business plans. Okay, so it's good to see that. Hold on, we'll ask questions later on, but unless you got a quick one.
Well, it was just kind of quick. If we bring like a pile of notes that we've been compiling, then can the coach help us from that point?
What I would recommend.
How organized do we need to be?
Sure. The way to take advantage of us most efficiently and get the most out of us is the City of Austin holds a business plan introductory class every month. Going to that class, it's taught by a UT professor. It's 6 hours. It's very in-depth. If you go to that class, you'll get the framework for the business plan. You'll be able to take those notes and put them where they need to go. Then bring it to us for review, and we'll say, okay, this is good, elaborate on this, more information here, et cetera, and then you'll have a finalized document.
Good question. Okay, well, hold on. I don't want to sidetrack too much because I still want to stay on funding, okay? Pardon me?
When is the class?
You'd have to go to our website at the end of the session. I'll announce our website and all the classes because they're offered at least once a quarter, if not once every 2 months. We offer them on a repeat basis.
The business plan class is every single month.
Oh, is it every month? Okay. See, Lance knows some more of that, and I'm with the City of Austin. Our coaches know.
It's okay.
That's it. It's good. Yeah. It's good. Okay, let's get back. It's back here on funding. So, can a business owner get pre-qualified for a business loan? What's the answer to that?
I got an answer. Let me just put this in the framework. We have some programs, and I'll use Tex-Mex Alliance, and it's teaching business owners that are first-generation immigrants a course. If they graduate from the course, they automatically qualify for a loan from us. And we do the same thing with veterans. So we have a veteran program in Houston. If you go through the 6-month training program successfully, you automatically get a $20,000 loan at 5%. So that's a pre-qualification. Now, some folks come in, we don't just walk in and say, we'll give a letter of credit or a letter of commitment for someone if they want to go out and purchase some equipment if we think that they're a good candidate for a loan.
Shasi?
We don't really have a pre-qualification program. We will at times do an indication of interest if you're just wanting to know can we do this sort of thing? And like, for instance, we have a company up in Pflugerville that was looking at purchasing a particular piece of land, but had some things to work out with the city of Pflugerville. And so we went in and said, yes, we looked at, pre-qualified them, but based on all the financials and all of that, and gave an indication of interest because it wasn't a set deal. So we'll do that sometimes. But for the most part, when you're coming to the bank, you're typically knowing what you want to finance, and you have a budget for that, and we'll just go ahead and do a real underwriting and commitment.
Okay. Let's keep going on here. Okay, so what are typical issues business owners overlook that could negatively impact their funding opportunities? You want to go ahead, Gary?
Sure. Well, it's some of the traditional factors that a bank looks at. In other words, if you have some dings in your credit, we don't have a minimum credit score, but it's going to hurt you in a lot of other things, purchasing cars. So do whatever you can to improve your personal credit score. So if you have some, as I said, some dings in it, we'll lend to folks with credit scores under 600 if their credit was as a consequence of, say, some medical collections over which they had no control, but they're trying to fix it. So we're not credit score driven, but you should want to do it anyway to help yourself. And then I would also say to figure out how you're going to cash flow your business. If you're going to get a loan, can you service the loan and you have enough cash to sustain the loan and your business? So we use third-party collateral. We use co-borrowers. We'll work with you on that. But nevertheless, those are, I'd say, the cash flow, the credit, and then the collateral seems to be the biggest challenges, whether it be for a traditional bank loan or even from a loan from us, although our requirements are considerably less. But those are three things that people mostly overlook.
Shasi, I'm going to ask you, and then Lance, I'm going to ask you to speak on behalf of the coaching that we provide. Go ahead,
Shasi. I would kind of echo what he says, although our credit score is probably above 600 that we'd be looking for. But again, you're not totally off the table if you've had a bankruptcy even in the past, or you have some collection issues. It's mainly, and it's preferable if when you come to the bank, you've looked at your credit report, you've looked at it online, and you at least have like a written explanation for any particular dings on there. Like he said, if it's a medical collection issue, or sometimes there's a dispute or something's on there that's maybe not even really does relate to you, it's a mistaken identity. So it's good to have those things up front. Again, that's part of it, is what Vicki said. As much as you can bring to us up front, that'll help the process go more quickly. The other thing, I would echo again what I said before on poor quality financial statements. If your balance sheet doesn't balance, if it doesn't balance with the income statement, if the reconciliation of the equity accounts from year to year, there's huge adjustments that are not explained. Those are the kinds of things that take time to go back. So if you have all of that in order when you come to us, it's a lot faster and will help your process.
Okay, Lance.
Sure. In terms of crowdfunding, a lot of what I've touched on, preparing are things that are overlooked a lot, but also during the campaign on the front end and the back end. And the first thing on the front end is you need to create social proof for your business idea, for whatever endeavor you're crowdfunding. And that social proof is going to come from your more immediate network. What you need to do is you need to get your close friends and family to pitch in early. And that early contribution is going to tell people outside of your immediate network, your colleagues, your acquaintances, and then their second-level networks, third-level networks, that, hey, someone's supporting them, someone believes in this idea, this thing's got legs, I'm going to jump in here too and contribute. So that social proof is very important. That's one thing that's really overlooked. You don't want to start blasting your campaign out to your social network. They visit your crowdfunding campaign, you've only raised $100 of a $10,000 goal. They're going to leave the page immediately. That's not exciting. So at the end, fulfillment is also important. If you're going to be delivering a perk or reward in exchange for a contribution, you need to be able to deliver and fulfill that. The biggest thing that some of our customers have run into is shipping. One of our customers did a crowdfunding campaign on Indiegogo and had a backpack that he was was his product and turning it into a business. He sold 200 backpacks in 12 different countries, and he had to figure out how to ship to New Zealand, Saudi Arabia, some countries that he didn't even know existed, and he took hits on the shipping costs for those. And so he, totally took the hit, didn't understand, he had to factor those in to the contribution amount. But at the end of the day, he was able to say, hey, I sold 200 units in 12 different countries. So, he used it as kind of a marketing cost. But.
That's great. It's great marketing.
Yeah. Sure.
Okay, I'm going to switch this up a bit, and we're going to talk about a sales pitch. And so I'm going to ask each of you to tell us a little bit of how much influence does a convincing sales pitch carry in the funding process? Come on, Gary, let's go.
Okay. A sales pitch is something let me start at the beginning. We actually have a program for a 2-minute sales pitch. And in fact, we're doing this with women veteran businesses, and they're all going to meet in Plano, Texas on November 18th and 19th. It's a pitch competition to where you say in 2 minutes who you are, what your business is, what your plans for growth are, how much capital you need, and then and ask to the crowd. So if you can concisely present that, then you really have a handle on your business and who you are, what you are, and where you want to go. That's and you can do that in 2 minutes if you practice.
Great, Lance.
With crowdfunding specifically, you're trying to reach people on an emotional level. A lot of times people aren't contributing to a campaign because of the perk or reward that they're going to receive. Yeah, that may be part of it, but they're contributing to it because they believe in you, they want to see you succeed. And so I learned from our executive director, Rosa, who's sitting over there, that you need to be able to tell the story of self, and you need to have a story. We're all, for millennium, have been storytellers, and we relate to stories, and that's the best way to reach people. So with your crowdfunding campaign, you have to be on that video, and you need to have a video. Crowdfunding campaigns that have a video are, exponentially more likely to be funded than if you don't. And on that video, you need to be able to tell the story of you, your personal story, and the story of your business, or the story of how your product or service is going to help fulfill a need or a pain in the market. So it's very important to craft that message.
Well, I'm so glad that Gary and Lance are here, because their answer sounds so much more exciting. I will say, from a sales pitch point of view, we don't even need that. We're the plain vanilla cookie cutter numbers people. We're bankers. And so sales pitch is not a big deal. Like I said earlier, though, we are looking for you to have experience. So, that's important. And for you to have knowledge about what you're doing. But we're a lot looking at those numbers. So sales pitch isn't big.
And
but it sounds very fun.
No, that's fair, because that's something that you as business owners need to know. You need to have a sales pitch for, and who you don't need one. And as you can hear it's traditional bankers really don't need one. It's all in the numbers.
Right.
Well,
because we take it to a committee for approval or for sign off to a few people, and they're looking at numbers. They're not hearing the sales pitch.
So Shasi, I'm not going to ask you this next question, but I'm going to ask Lance, you, and Gary here. So how much influence does a convincing sales pitch carry in the funding process? I know it.
Well, it's a way of introducing yourself to a funder, and if you,
a community lender.
Pardon me?
Different than a banker, because Shasi just said, it doesn't matter to me. I just want the numbers.
Well, and ultimately, but as I said, as an introduction, we're going to be more predisposed to working with you if you can come on. The hard part is when somebody comes in, I have a great idea and I need $100,000. Okay, and so then so that's not very convincing. But somebody who comes in and said, I'm so and so. Here's my business. I need $37,500 to purchase this piece of equipment so that I can pick up this many more customers. Now, then that's somebody that we would like to talk to. So it does make a difference. It's an introduction into the partnership between us and the client.
So communicating clearly what you're asking for.
Exactly.
And how you're going to pay it back, or just what you're asking for.
Well, no, and obviously part of that is how your plan for growth is particularly important for a startup to show what kind of financial projections. And, some of them, say we're going to make, $10,000, in the first year, and we're going to make $250,000 in the second year, and you're going, wait a minute. There's got, so you got to look at something that makes sense, it's logical, and it's achievable too.
Okay. Lance?
And I think crowdfunding can really fit in to that statement that Mr. Linder's saying. So if you have, for example, has anyone watched Shark Tank in here? We're talking about pitches. Did anybody watch Friday? Last Friday? So one of our customers was on there. You may have seen him with the child carrier, the two guys from Austin. They did their pitch. And so we got the privilege, really, of being with them through the whole process. It was very exciting to me as a fan of the show and then just the whole idea of it. But he is what they call pre-revenue, right? He had a startup. He had a product, an idea, a prototype. He took that prototype and he crowdfunded it. And then he got validation for that, selling 200 units in 12 countries, raising $32,000. And then when we worked with them, okay, well, how do you take that and you can use those figures and those numbers for your projections? And when he went on Shark Tank, you may remember if you've seen it. If not, go back, watch it on Hulu. You can watch it for free. Now it's probably up there. He used that as validation. So when you come to someone, you say, I'm raising $200,000 for a third of my business, and I don't have any sales. Okay, thank you very much. Have a good day. All the projections you said are just assumptions. If you use crowdfunding as that tool for validation, you could say, I raised $32,000, sold 200 units in 45 days, and so there is the proof, right? There's that proof that you have something to use. So I think that's what it can be used for.
Shasi, you want to comment? Or?
Well, I was going to say, I mean, Gary touched on something in terms of, and I didn't think of it really as sales pitch, but yes, I mean, it's just sort of backing up your projections. If you're backing up your projections with well thought out premises, then that is something that does matter to us as well.
And it won't be long that checklist that a lender has, one of the new things that's going to be on there, I guarantee you, it's going to be how much did you crowdfund? And how many backers did you have, and how much did you raise?
Yeah.
Well, actually, you know what? That leads me into our next question here. Are you guys seeing a trend of business owners using a combination of funding sources, bootstrapping, crowdfunding? I mean, what are you guys seeing these days?
Well, what we see is a lot of people getting in trouble with credit cards.
Yeah, okay.
And the reason I say that is these introductory periods really sucker people into a situation. So we've done some debt consolidation loans where people have, with good intentions, and they're using the credit for their business. It's not irresponsible use, but you can get in a trap where just servicing your credit card debt could just almost choke your business. So that's one thing that we see as a trend. And a lot of people come to us when it's too late. So if you need some funding, there's a lot of other organizations like ours that can help, or banks, and our job is to take a business and put it in a position where it can compete for a bank loan. That's we call economic gardeners. We sort of try to grow you, give you some little money, hug you a little bit, and then move you on. So that's kind of. But what I see is people getting into trouble in credit cards, or some other source. And the bootstrapping, is your money, your family, your friends, and an occasional fool who'll put some money into you. But nevertheless, it's that's a trend that we see. Or they've gotten themselves, they've let their credit take a hit because they aren't being able to service their credit card debt. Mm-hmm. So it's a slippery slope, and that's one I would encourage you to try to make sure you avoid as a business owner.
Shasi, what do you say?
Well, I would say the same. I think the startup financing of the past has been individuals using their own credit cards. And I think it's going to be exciting to see that change to crowdfunding and other financing venues for the small startup. And so I can't say that we've really seen that yet where we're getting that combination. But if that's the way it's moving, I think that's very exciting. And just to be here and working with your program, Vicki, for all these people to learn about those different sources and to avoid the trap of the credit card financing.
Okay. Before I go to Lance, Gary, you had something else.
Yeah, I was going to say that there's a number of ways to get funding. Crowdfunding is an excellent way. There's sites, and I'll give you two sites. It's called prosper.com, and the other one is ibank.com. And those two sites, for example, prosper.com has 1.74 million members. And they make, you can get loans from $2,000 to $35,000. And you basically said, here's my business, bid on me, folks. And it's almost like a Kiva or an eBay model. And so they've, $500 million has been achieved in $2,000 to $35,000 loans, on that site. And the other one is ibank.com. And that's when people want loans. And what happens is you put your loan on iBank, and guys like me go through and put some what I call sorting criteria in. Texas-based loan, it's been in business this long, and then I purchase that lead and I contact you. So there's other sources, but crowdfunding is an excellent source, and these are two sources that most people don't know about, and they don't always work for everybody, but they do work for some.
Okay, good. Okay, Lance?
Yeah, that peer-to-peer lending model is very interesting, and it's a type of crowdfunding, but you still have to meet certain parameters, through the lending process. And so, I think it's a great alternative too. As far as the whole piece of the pie, I think the guy who went on, our customer who went on Shark Tank is a great example. He used crowdfunding to raise $32,000, and then he sought an investor and raised an additional $200,000. So he used crowdfunding and investment. It can also be used in conjunction with the bank loan. If you're raising if you need to get $100,000 to start your business, the bank's going to want to see you come in as a startup for about $20,000 at least. If you can go to the crowd and get that $20,000 or more, now you've got your equity injection, you come back to the lender, you're a better candidate for a loan. So use all these sources that are available to you.
There's a lot more out there these days to secure funding than there was in the past. A lot of things have been opened up, and it's really interesting to watch this crowdfunding phenomenon that's going on, because it's just amazing. And how long has that been now, Lance? How long has that been available?
Crowdfunding? For non-equity, just your classic crowdfunding has been going on since around 2008. Interesting, quick little story. The first crowdfunding event ever was the Statue of Liberty was crowdfunded. Right. We got the Statue of Liberty from France as a gift, but didn't have any base to put her on. And so someone had the idea to ask the U.S. citizens, would you like to contribute? They needed $100,000 to build that base. Well, the average contribution was 89 cents. So 89 cents from however many individuals that was built the base for the Statue of Liberty as the first crowdfunding event. This was back.
Yeah.
I did not know that.
A couple century and a half ago.
So
it's pretty interesting. So it's always been there, but the tools that we have now, social media, crowdfunding platforms, and their transparency and how they make it all work, that's what's new. Yeah. And next year we'll be able to crowdfund for investment, and that's another very exciting piece.
Great. We're doing real well on time today, and I thank you, each one of y'all, for keeping your comments concise, but they've been so straight on. I mean, all the information has just been so valuable. And so I just have one last question, and then I'm going to open it up for questions, if you will, and that's, what one takeaway item would you want business owners to know as it pertains to funding? And you can add a couple if you want, but this is just the last catch-all kind of question. And so, Gary, I'm going to open it up.
No, I want to go last.
Oh, you go last? Okay, Shasi, go ahead.
No, I want to be last.
Let's see if Lance wants to. Lance, you want
Sure,
to do
I'll
this?
go first.
I know Lance is always going to be the first one to say, okay, I'll do it. So go ahead, Lance.
In terms of crowdfunding, again, specifically, think of it as an event. Think of it as a social event. If you're an introvert, it's going to be a lot of work, because you're going to have to get in front of people and you're going to have to expend that energy. So be prepared for that. Also, think of it as a tool for validating your idea. Those two things, I think, is where, beyond the funding piece, is something that's very valuable.
Okay.
Okay. What I would tell you is
Shasi, you go last.
Okay.
Go ahead, Gary.
Flip a coin.
all right. Now, what I would tell you is there are a lot of organizations and financial institutions that really are on your side and want to help. And as I said, so don't. We have a lot of folks that we've lent to that have been discouraged because they have been denied. So don't lose hope just because one door is closed to you, because there's other doors they may be open to it. If you really believe in your business, don't give up that dream. And what we always tell folks is entrepreneurship and business ownership is not for weenies and wimps. It's for people that really have a commitment to be self-employed and sustain themselves. So what I would tell you is there are people out here and that are on your side and want to help.
Okay, Shasi?
Okay. I would just say get yourself organized, get yourself prepared, and we would really look forward to speaking with any of you. We're really committed to helping businesses grow. And like I said, again, we're a community bank and really geared towards small businesses.
Thank you. Thank you. Well, before I open it up for questions, I want to say thank you to each of you today for spending time with us here at the Small Business Development Program, the City of Austin, and passing on this wonderful information. Wasn't that great stuff? It was really good. Before I open it up for questions, though, I just want to remind you, this is the kickoff event for Small Biz Funding Month. And up there you'll see there's a lot of coordinated efforts, there's sessions offered. Please go to our website and follow us online. And do take advantage. Our mayor declared last Wednesday that October was Small Biz Funding Month, a first ever for Austin. Meet the Lender today. This is our 10th annual event, and we've won numerous awards. You'd be surprised how many other communities are now looking at Austin to say, my gosh, what a great concept. Get the lenders out of their offices and have the business community come visit with them. And so take advantage downstairs, visit with them if you haven't already, but also make sure you look at the other sessions that are going to be offered, and please, please take advantage of all the resources that are available for you in Austin, because we want to continue to have Austin be the #1 place for small businesses in our country. Okay? So with that, I'm going to open it up to questions. Y'all ready?
Yeah. Hope so.
Okay.
There they go.
So my question is going back to that hint about the opening of crowdfunding for investments. Can you go a little bit further into that as to what information you do have?
Sure. So there's nothing solid right now. So in 2012, legislation was passed through the Jobs Act, which stands for Jumpstart Our Businesses, Jumpstart Our Business Startups. Yeah, and that makes crowdfunding for investment legal. Unfortunately, that legislation had to go through the Securities and Exchange Commission for processing all the the regulations for that, and so we're still waiting to see a lot of those. Best estimates, it was supposed to be beginning of 2013. The SEC, for whatever reason, was a stalwart on it and just stalled it and everything else, but. Best estimates are that in 2014, you'll be able to crowdfund your business for an investment. So you'll be able to raise up to $1 million and in exchange give away equity, a piece of your business. As part of the funding month, on October 24th at 6 p.m., I'll be doing a crowdfunding seminar, presentation, workshop at the Entrepreneurship Center with the Small Business Development Program, going into much greater detail about that. But a lot of it's speculation right now.
Thank you.
Okay, thank you. Hold on. Before we go to the next question, I was just asked to remind y'all, please provide us your feedback on this session. Every Meet the Lender, we have a different session, and so we take all your valuable feedback, and that's how we plan for the future. It's not like we, the City of Austin, say this is what we think is next. We really do look at these evaluations and take every one of your comments seriously. So please spend some time to finish this. Okay, next question. Gentleman right here, and you've got Alyssa over there with the mic. So we're going to split it. And we have time to take these questions. We're not going anywhere. Okay, we're going to take all these questions. So.
Hello?
Yes.
This question's for Lance, and maybe you'll go over this more in the crowdfunding workshop that you have later this month, but I wondered if you could help me with this question. Let's say your business, how much money you want to raise, but you're not sure if you're going to be able to reach that goal. Is it better to lowball that goal when you do the crowdfunding campaign, or is it better to be a little more ambitious about it and hope that you reach that goal?
That's a great question. So what we can help you do is kind of assess your network. So you want to have an expansive network. How many people are in your network? We also want to look at the value of that network. How many people would be willing to contribute? How many people are you Facebook friends with that you went to middle school with and who, whatever, you just got them on your friends list. So we want to look at that and kind of put a little bit of information in that for the projection. On Kickstarter, for example, successful campaigns are raising about $7,800. So that's a good baseline that you can use. For non-equity crowdfunding, people are raising, on average, that, but they're also going up to about $30,000 to $35,000. You see some of those projects on there raising $100,000, even millions of dollars. Those are really outliers. And if your project is going to be something beyond $30,000, you might want to break that up into smaller goals. If you can grow for one stage with raising half that amount, then do that and then let your social capital kind of reboot, take some time, and then go back to the crowd and say, look, this is what I've done, this is where I'm trying to go for stage 2, you helped me once, will you help me again? And so you can break it up. That's a very good idea.
Okay, next question. Back to you in a minute. You had your hand up next. And now we'll go to the back and we'll come back to the middle.
Hi, my question is, can you hear me?
Yes.
Yes.
Yeah, tell me if you want. My question is actually for Gary, but if you others would want to talk about it, that's fine with me. I have 3 questions. One is, as far as it's about paying back the loan. A lot of times, the biggest fear is, what's going to require me, what do I have to do to pay back that loan and how soon? My next question is on the security of being able to talk about your business. We're always afraid that if we go and talk to someone about the business, somebody's going to take that idea, and then all of a sudden our business is not going to be working. And then my last question is about, as far as a nonprofit organization, what impact does it have on you if you have like you said, you did the crowd deal and you have money and you come to a nonprofit organization. Is that going to impact the way you're going to be able to help with a loan?
Okay. The first question on the payment, what we do with our clients is we'll look at what we think your capability to repay is based on your business and your business needs. So we can stretch the life of the loan to make interest pay lower. In some cases, we start interest only for a period of time and then principal and interest. So we're looking at everybody on an individual basis on what their capacity is to repay. And there's no penalty for early payment if your business is successful. And in terms of confidentiality about your business, we're not, if some people have ideas and they're concerned about the intellectual value or the monetary value of that business concept. We don't. We treat our clients with total confidence, and we don't divulge that outside of our organization. So I would not be concerned about that. There might be some that what you're worried about is competitors that we're trying to take that, and that's we don't peddle people's business. We treat everybody with in confidentiality. And then I'm not sure I really understood the nonprofit part of what you said. We do lend to nonprofits, but I didn't quite understand what your last question.
You say you're a nonprofit organization.
Yeah, that's correct.
And I'm saying that as a nonprofit organization, if I had already gotten some money,
yes,
and I feel like I need more money,
yes,
and I come to you, what
yeah.
type of impact is that going to have on me to be able to get more money? Is it based on the fact that if you have money, then why are you here, type thing?
Yeah. Well, I think I understand your question. In other words, if you come to us, we're a nonprofit, you have some capital for your business. Obviously, we'll provide some additional capital should you need that. And as a nonprofit, what we try to do is try to keep the interest rate at a reasonable amount, even though the money we lend, we borrow from banks. So it's going to be a little bit higher than bank loans. But nevertheless, as a nonprofit, we're more interested in your business, who you are, and how we can make you successful. And in some cases, we're going to say, I think you'd be better served by going to this organization, maybe to Rosa's organization. So our interests are what's best for you. It's not about taking your business and trying to capture it. So I would tell you that we're going to do what's best for you, and it may not be us. Okay?
And actually, you can count on that, because even we at the city sometimes get involved, because we know what every one of the lenders in town pretty much, what their criteria is. And so we'll also point you direction, because the whole goal is for you to succeed, is to get the funding. And it's just like the lenders that are downstairs. We tell every one of them, don't come to this event if you're not willing to talk to small businesses that have a great idea, that may not have any collateral, and talk to them about how to develop that relationship. So Gary's right with that. So thank you, Gary, for saying that. Okay, there was a question about...
And I just wanted, just real quick, if you go through the City of Austin's program for the coaching and you come to us, first thing we'll do is we sign a non-disclosure agreement and confidentiality agreement. So if that will make you feel more comfortable.
Oh, thank you for saying that, because yes, that is
It's
true.
all confidential.
That is true. There was a question, hold on a second. There was a question back here that I'm going to take, and then I'll take this one right here. Oh, I'll get it, Alyssa. She's on this side. I'm so sorry. I'm looking at her like, I can move.
Hello. In terms of collateral, is there a percentage of the total loan amount that lenders look for?
Well, we're typically looking to be, on a conventional loan basis, looking to be covered by the collateral by a margin that would take into account the liquidation value of that collateral. However, we do SBA lending, which the SBA guarantees our loans. And so for those loans, we're much more lenient in terms of collateral coverage. And because it's part of the SBA guarantee is to mitigate the fact that someone might not have a lot of collateral, and so it's just a variable, and that the amount of collateral that you have kind of helps determine what product you end up in. Instead of if you don't have a lot of collateral, then maybe that's when you end up with an SBA guaranteed loan versus what we call conventional, which is without an SBA guarantee.
Okay, thank you. And then Gary.
Yeah, in our case, we look at the total package on a person. If they have very strong cash flow, they've been in business for a while, our collateral requirements are reduced. We actually have a loan for existing businesses that have been in existence for 2 years, and they can get an unsecured loan from us. But that has to be a very strong business. So it's the strength of in our case, it's the strength of the weakness of the business that will dictate the amount of collateral that we feel that we need to cover, to mitigate the risk to us.
Okay. What about for a startup? In a startup situation,
right.
If someone was coming to you asking for $50,000 and they had 10% of that in collateral, and would that be enough? Yeah.
For example, a startup, say some small amount. We look for 3 things in a startup. Number 1, your relevant experience. Number 2, show us that you've bought something or have put some money into your business yourself. And then the third thing is, do you have any other source of income to sustain you during the startup phase? But on a small loan like that, we can work with you on a reduced or very small amount of collateral, because that amount doesn't represent a huge risk to us because of the small amount.
Right. Okay. Thank you.
Hold on a second. There was I think you had the next question. Yes, and then I'll do. Okay, go ahead. I do. Yeah, you do.
Okay, I thought I was yelling loud enough. Gary, you mentioned seeing equity, someone putting their own money into their business. If I were to ask for like a $20,000 loan, and I've invested almost $20,000 myself.
Well, I mean, that's huge.
Okay.
In other words, our equity requirements typically are about 10% of what you're asking for.
Okay.
In some cases, they might be higher if there's some risk, but we look at 10%. So if you want $20,000 and had put 10%, $2,000 into your business, we'd be satisfied with that as equity injection to show intent.
Okay. When I call PeopleFund, can I meet with you? Or will I be told to meet with
you
someone
can,
else?
but I have people that are a lot smarter than me who work for me.
Okay.
No, I'm happy to meet you.
Okay, thank
And
you.
as I said, we have some really super loan officers, and they're young and they're smart, and our object is always to do what's best for you, and not what's best for us.
Thank you.
Good questions. Good questions. But yes, Gary mentioned something that I need to also share with you is that it's also like the Small Business Development Fund. And Shasi, I don't know, especially with you, but if you guys call it Small Business Development Program, you're not going to get me per se. You're going to get one of our team members. But I got to tell you, everyone on our team, you know, your team over at PeopleFund, BCL of Texas, ABC Bank. We all have teams that are, I don't want to say they're smarter than I am so much, but yeah, they really are. They really are. And so contact any one of us, and you can be, I can assure you, you will get the best help that you're going to get, especially in Austin. Right back, Phyllis. Oh, I was pointing back there. Well, go ahead. Oh, thank you. It's okay.
This question's for Lance. Have you ever seen anybody hire a publicist for a crowdsourcing campaign?
Yes. The gentleman who did the Shark Tank, most recently, the freeloader, he hired a publicist, spent about $1,000 to reach those key influencers. You want to reach bloggers relevant to your product or service. There's also a PR firm here in town called Leverage PR. And they offer 3 different packages for people crowdfunding at very affordable rates. And each of those packages has a different service, but they call it the Crowd Builder. If you have the money to do that, that's great. That PR is definitely going to help you because it's a PR campaign. If you don't have the funds to do that, we can help you write a press release, or we can help you craft your marketing message to really be convincing and impactful. So that's something that the City of Austin, through the business coaching and BCL of Texas, that partnership, we can work with you to do that.
Great idea.
Thank you.
Good evening. Can you hear me?
Yes.
Okay, I'm Arvin Poole. I'm actually the founder and executive director for a nonprofit in town called Day with Daddy. We connect fathers with resources in their communities, stay engaged with their children. And my question to you is specific to Lance and Gary. No offense, Shasi.
It's okay, I'm just the boring banker over here.
Right.
No,
We actually launched our nonprofit at South by Southwest, and one of the things that I have gained a lot of advantage is being in Austin, for one, but two, the social aspect of it. And we're actually planning a crowdfunding, and I think she asked a great question. I would love to speak with you, Lance, about a social media and PR strategy for our campaign. But we're also forming a for-profit to help us fund the not-for-profit. And that's my question to you. Do you work with
I work for
business entities that will actually, help us to write a more umbrella business plan? Because what we've been advised, and we've pitched our business to through several competitions, is to separate our non-for-profit from the for-profit. That's where we really need our biggest help.
Absolutely. You're describing a social enterprise, and BCL of Texas has a social enterprise. So BCL of Texas is a nonprofit lender, been around 23 years. Last year, the year before, they started a social enterprise, and to create an impact in a community that has problems with diabetes and eating healthy, created an olive oil brand and is now selling affordable olive oil throughout Texas and going beyond. And part of the sales from that bottle of olive oil come back to BCL of Texas so that we can increase our loan amounts, offer services for free or low cost. So you're describing kind of this hybrid in this relationship that's becoming more and more popular, and even government is starting to catch on too, and allowing for these for-benefit or low-profit L3C, low-for-profit companies to exist legally and in conjunction with nonprofit, for-profit enterprise.
So there you go.
So yeah, Rosa's done it, our executive director. So we can get you in touch with her, and we'll be happy to meet with you.
Okay, last questions. Okay.
have a question about equity-based crowdfunding for the more conventional loans. So let's say I go and do one of these equity-based crowdfunding campaigns. I've given away 40% of my business. I've decided I need to go buy a warehouse. I'm going to need a conventional loan because I don't want to give away any more equity. Now that I have 10 new members of this LLC, who are both voting and non-voting members of the LLC, what does that look like through the lens of a conventional banker? I've never met these people. We've never had any extensive phone calls. All the bank is going to see is me, but I've got these other 10 members of my LLC. What does that mean for a conventional loan down the road?
I'll answer part of that. When we work with a LLC or a corporation, anybody that has more than 20% ownership has to be a signer on a note to the organization.
So the same for us as well. And so as long as they're all below that 20%, then they really don't become a factor. And we are still looking to you as the guarantor and the operator of the business.
Just to be clear, crowdfunding for equity is legal only if you're approaching accredited investors right now. It's illegal to approach anyone or solicit to anyone who's not an accredited investor. So keep that in mind. It looks like you're shaking your head, so you understand that. So I think a lot of that's going to become more clear as the SEC regulations are published. So what's unclear right now is you raise, what amount did you say, $200,000? $200,000 and you give away 40% equity. Okay, what happens now? What happens when you need to go to that next round of funding? Is there going to be a stock exchange where you kind of graduate maybe into one of the exchanges? And that is all unclear. We don't know right now. And the SEC is actually asking for feedback from people who are on the forefront of this about how to set that up, how to structure it so that investors are protected, and so that it makes sense as well and is feasible. So still unclear on those things.
Okay.
That's a great question.
Any other questions? Let's make this the last question so that we can wrap it up. You can go downstairs. And also, we're all still going to be here. So if you have any other questions you want to ask to us individually, you're more than welcome to do so. Go ahead.
Yeah, I guess this... Check.
That's good.
I guess this question is for Shasi and Gary. Do you know the difference between an SBA loan and a Patriot Express loan? And can you elaborate on the benefits, perhaps?
Go ahead.
The Patriot Express loan, there's an unsecured loan up to $25,000 for people who are in a business that's 51% veteran-owned. And then there's larger amounts available through Patriot Express. And there's some collateral requirements once you get above that $25,000 range. So I think it's up to $350, if I'm not mistaken, on the Patriot Express. And those are usually offered through banks. The banks have a Patriot Express program. And then an SBA, and with the Patriot Express, the SBA is lending money directly to you. So you're on the hook with say a 7A loan. We lend money to you, and the SBA guarantees, protects us by 80 or 85% of that amount. So there's a difference. The requirements for Patriot Express loans are pretty significant because it's an unsecured note up to $25,000. So that's the fundamental difference. One is we use SBA money, one we use our money, but they're both SBA programs.
Okay, well, thank you so much for attending this session. Again, this is only the kickoff of Small Biz Funding Month, and you still have some time to go visit with some of the lenders downstairs. Thank you. Oh, and yes, don't forget your evaluation sheets again. Thank you.